Hello, everyone. It's Felipe here. Happy Monday. Hope everyone is doing good. I'm here to keep you up to date with current market news and teachings. This is in no way, shape, or form financial or investment advice. This is for entertainment and educational purposes only. So, with that being said, I'll go ahead and jump right into it. So some of the stuff that I've been seeing, which I've been basically talking about for a little while now, is the semiconductor market, right? The chip producers that produce these semiconductors that are used for just about everything in the world now. So Samsung has recently kind of come out and said that they're set to cut their chip production basically after a 14-year low profit, which that is basically signaling demand for chips are decreasing, right? And if demand of chips are decreasing, that means auto sales, computer sales, phone sales, and all these other things that use these chips are decreasing. So basically, Samsung said on that they plan on making a meaningful cut to chip production after flagging a worse than expected 96 plunge in quarterly operating profit as a sharp downturn in the global semiconductor market worsens, which is weird because not too long ago they were saying that while everyone else was cutting back, Samsung was going to increase to gain more market share. But it seems that now they're making a U-turn on that. So shares in the world's largest memory chip and TV maker rose 3%, and that's irrelevant. Basically, investors seem to welcome the cut of production, meaning you cut production for your chips, less supply, meaning prices might potentially go up. So I guess investors are kind of bullish on that sense. That's why after this news, the Samsung stock probably went up. So Samsung estimated its operating profit fell to 600 billion won, which is 455 million US dollars in January through March, from 14.12 trillion won a year earlier. That's a huge difference in operating profit that has changed just year over year, 90% drop. In a short preliminary earnings statement, it was the lowest profit for any quarter in 14 years. We are lowering the production of memory chips by a meaningful level, especially that of products with supply secured. It added in a reference to those with sufficient inventory. It was the lowest since a 590 billion won profit in first quarter of 2009, according to company data. So this would be the chips business first quarterly loss since the first quarter of 2009, a major divergence for what is normally a cash cow that generates about half of some Samsung's profit in better years. So basically Samsung is going through a tough time right now. Their operating profits from last year have dropped 90%, which basically indicate that demand for memory chips have fallen, and therefore the price of memory chips have fallen. I was kind of going into this about Macron, which they're also in the memory chip market. But the crazy thing is Samsung is something crazy like 20% of South Korea's GDP. So if Samsung is struggling, that means that South Korea is probably not doing very well right now. And like I was basically pointing out Macron, that they recently announced they had a huge loss, something like $2 billion, and they had to take a huge write down, which basically their inventory is selling less for less than what it cost them to basically produce it. So they've taken a huge loss in that sense. So this article kind of goes into saying that the last time that Macron had negative gross margins and marked the bottom in the stock, which I guess the analyst in this case is saying that from the perspective that the markets are forward looking. So usually when the worst or seemingly the worst seems to be occurring, the market is already looking forward. So here, what stood out to me is that Macron is actually selling their chips for less than what it cost them to produce them. So Macron gross margins hit a bottom in November 2008 when the company was paying on average $1.30 to make a chip. It could only sell for $1 according to the analyst data. So this was before their earnings were announced, which Macron did advise a huge write down in their inventory. And none of this is currently being reflected in the semiconductor market, because you can kind of see here that it's had a nice recovery this year. Basically, it's up 40%. The semiconductor market, which this is SOXX, which is a ETF that has a basket of stocks, and within it you have Nvidia, you have Macron, you have Texas Instruments, you have a lot of the big names in the semiconductor market, such as Intel as well, AMD, on Semiconductor, ASML, which is the European manufacturer that supplies the equipment to make the semiconductors. And on another note, which kind of relates to the semiconductor market, is the ongoing tensions between China and Taiwan, which basically Taiwan's president recently visited the U.S. For a meeting with U.S. House Speaker Kevin McCarthy, and China, like when Pelosi visited Taiwan, is now basically exercising threats to Taiwan again. Of course, they recently announced 3 days of combat readiness patrol exercises around Taiwan starting on April 8th. So basically they're doing another show of force around Taiwan with everything from Navy destroyers to Air Force fighter bombers, all kinds of military show of force they got going on over there right now, due to them saying that Taiwan is part of China and so forth, and that any Taiwanese officials visiting or having any kind of interaction with U.S. government officials is a threat to China. That's basically what they're saying. So they are doing another show of force. The crazy thing about this is that how many show of forces are going to do until potentially the possibilities of some sort of miscalculation can have a huge consequence, right? In terms of potentially starting a war. Why this connects to the semiconductor market is because Taiwan's Semiconductor manufacturing company is one of the largest semiconductor manufacturers in the world. They basically have 28% of market share around the world. So I come to think of it, if China attacks Taiwan, how is this going to affect the global market in terms of the semiconductor market, considering Taiwan has TSMC has 28% of the global market share. So I'm trying to understand how this might affect that. And then I'm speculating that in case that were to occur, the cost for chips might go up like dramatically due to the lack of supply, right? In case that this does happen and China decides to attack Taiwan. But however, when the prices of commodities go up too much, that basically kills demand, meaning less people can afford or to buy those commodities that really go up in price. And in return, it basically, as per the law of demand, that holds that the demand level for a product or a resource will decline as its prices rises. There are so if the price of these semiconductors chips go up dramatically because supply has been dramatically affected due to China attacking Taiwan and TSMC being 28% of the global market supply, basically, that can happen. It can make the prices of these chips go up dramatically and then in return kill demand because less people are going to buy them, right? That's kind of a difficult topic for me to explain, but at least that's how I'm kind of looking at it. And then what stands out to me about this whole feud or this whole problem is that China has been buying a lot of gold, and this might be why gold prices have gone crazy recently, not only because of the bank crisis and so forth, but there has been a lot of countries buying gold as a way to protect themselves from inflation because their currency devalues dramatically due to inflation, and as a way to protect themselves from sanctions from the US. So like a way of protecting themselves from rising interest rates in the United States, a rising dollar, which hurts typically other currencies, and then to protect themselves from sanctions from the United States, which basically we saw with Russia, right? When Russia attacked Ukraine, prior to Russia attacking Ukraine, Putin was basically stockpiling a lot of gold. I guess he foresaw the retaliation the United States was going to have and sanctioning Russia, which basically completely collapsed their capital markets. China seems to be buying a lot of gold. I don't know if it has any kind of similarity to that or they're just hedging themselves, but they are basically 11 months straight have been net purchasers of gold, which is interesting to me that they seem to be doing this along with forming the BRICS world order, whatever is called. BRICS is basically the allegiance between Brazil, Russia, India, China, and South Africa, and all of them are major buyers of gold. Again, it could just be a way to hedge against their own currency devaluing, or on top of that, protect themselves from sanctions from the United States, because the U.S. cannot really sanction the price of gold. I mean, they probably can, but it's less likely that they have less of an influence on a commodity like gold, right? A precious metal. So I find that super interesting, considering also that, like I was saying, Russia basically started stockpiling a ton of gold before they attacked Ukraine. And here you can kind of see gold prices near all-time high, which is interesting to me because, and then I believe that gold prices are currently influenced just because of the whole banking crisis that is going on, potentially because other countries are buying it. Well, India, Russia, China, and other countries are currently net buyers of gold. But gold and silver. So the countries are influencing the price of gold going upwards, Gold and silver are typically influenced by economic growth, because silver, for example, specifically silver, which I don't feel like should be increasing because countries are not buying it as they are with gold, right? And silver, as well as gold, they're very influenced by manufacturing, right? Because gold and silver, at the end of the day, although they're precious metals, they're also commodities, and they're used in all kinds of products, from smartphones to cars to anything in tech, really, and other industries. So they're used for manufacturing. So if manufacturing slows down, that means there's less demand for these precious metals. But from what I'm seeing, the price of gold seems to be influenced by other countries currently buying it as a hedge towards their own currency and towards rising rates in the United States, and for other reasons that I potentially have no clue. So that's some of the interesting things that I've been currently seeing on the market. So yeah, with that basically saying that, I leave you guys with a market quote. If you owe a bank $1 and can't pay, you have a problem. If you owe them 1,000,000 and can't pay, they have a problem. Which is basically kind of like what we're seeing now, right, with the banking crisis that's been swept under the rug. And then I'll leave you with some economic information. This is kind of pretty cool here. So financial institutions have been merging into a smaller number of very large banks. Almost all banks are now interrelated. So the financial ecology is swelling into gigantic bureaucratic banks, often gasonized in their risk measurements. When one falls, they all fall. The increased concentration among banks seem to have the effect of making financial crises less likely. But when they happen, they are more global in scale and hit us very hard. Yeah, I find that very interesting, especially now with, what has recently been ongoing with the bank crisis, and how the Federal Reserve and other countries have had to step in, such as Switzerland with Credit Suisse. But ultimately, what happened with Credit Suisse is USB Bank acquired them. So this kind of correlates with that, which I find very interesting. They just become bigger and bigger until, boom, you can't kick the can anymore, right? So yeah, with that being said, thank you guys for watching. I hope I shared some valuable information with you today, and I'll see you guys soon.